General Electric reported their earnings today, and some looked at them and said, well, the EPS and the revenue, kind of lukewarm. However, they did have a couple of numbers that were quite strong, and that was on the industrial margin expansion side, 120 basis points, and orders up 19%. Jim, when I looked at the stock, up 10% for the year. 3% yield. Are we done here? Is this it?
I was going over this quarter with Stephanie Lynn, co-portfolio manager with me for Action Alerts, and I was trying to say, listen, we got to buy it. And we have to buy it because it's become an industrial company again. It's a company that I can understand. It has oil drilling, oil service.
Jet engines.
It has great aerospace. We own Honeywell. I was disappointed with Honeywell because of defense. Everything else was good. Honeywell's down badly today. And you always want to be in stocks that are up, not down. Honeywell's been a big win.
Preferably.
But I think that Honeywell is the kind of company that GE aspires to be. It's a business company. And GE's no longer a financial services company. And I find that to be fabulous. That financial services was never able to understand. No one was able to understand it. This company's going to be valued on orders. And I think the people who don't understand that they have leverage here. There's a lot of margin expansion. So you have leverage and you have orders. What more can people want? This one's taken off.
I think you bring up a good point when you bring up the idea of perception of this company, because a few years ago, we were talking about them when they chose to go back to their roots to an industrial company, got rid of NBC, really just started to hone it down and get very focused, and everyone kind of went, just industrial? What a horrible mistake.
Well, take a look at Parker Hannifin.
Take
a look at Boeing. The companies that are working are the industrials, and GE's had good orders in China. One of the call-outs that I love was that Europe's very strong. How about that?
Well, you bring up a good point too, because when you go industrial, you are, you're putting your cards down on good economies, and if the economies pull back, then that's when they struggle.
Right, and that's true. You're going to take that risk, but I think if you have a worldwide expansion going on, GE has suddenly become a go-to name.
All right, and also GE's in a lot of energy areas as well.
The Slufkin acquisition hasn't panned out yet, but they're not a mini Schlumberger. Schlumberger was beautiful. They're not a Baker Hughes, but they have decided very aggressively to get into oil, and oil is right. So they're in power generation, and that's going to be a great business. Aerospace, great business, and multi-year businesses.
All right, so even though they're up 10%, you'd still put some fresh money there.
Yes.
All right, and just as a reminder, Action Alerts Plus, I was looking at your numbers, up 19% year to date.
Yes, thank you very much. We're doing nice.
So, that's the thing. Keep in mind when you're getting this information from Jim, take a look at the Action Alerts Plus, and when he's saying he's looking at a name, you might want to look at it as well. Put that on your radar. That's Jim Cramer, and I'm Deborah Borchardt with The Street.